When and where has it all started? Hello dear friends, welcome back to the channel where we talk numbers. Acknowledging one of the comments to our videos, let's do some time travel today and see how accounting evolved over more than 7,000 years. Spoiler alert, today's double entry started with clay, quills and a Renaissance math whiz. Yes, accounting has deep roots in the history of humanity. It was born the moment people traded more than they could memorize. They needed to keep track of things. And as far as around 5000 BC in Mesopotamia, which is roughly a modern-day Iraq, scribes used clay tablets to track sheep, grain and silver owed to the temple. The clay tablets looked like these and are supposed to be the first evidence of basic accounting. And to be honest, I don't know whether what you see on the screen is about sheep. Sorry guys, cannot really read wedge-shaped writing yet. Anyway, one of them depicts molten barley groats, another one a loan of silver, and yet other ones what it would be a promissory note for silver and quittance for a loan in silver. They look interesting, don't they? Now let's time travel 2000 years forward and move to ancient Egypt. You know of Egypt because of pyramids and mummies, and for sure rarely think of it when talking about finance and accounting. However, this period and location were another milestone in the development of accounting and finance. The Egyptians organized massive state granaries. Papyrus scrolls listed incoming wheat, outgoing rations, and surprise inspections by royal auditors, one of the first internal control systems. There is evidence that an individual in ancient Egypt held the title Comptroller of the Scribes. Now let's fast forward to ancient Rome. Big empire, a lot of land, property and money, a lot of things to control and manage. Not to get lost in numbers, wealthy households started to keep daybooks named Codex Accepti et Expensi, literally money in and out. Governors filed accounts back to Caesar, a kind of an early external reporting. After that, certain developments were taking place in Middle East and Asia, which have evidence of establishing double-entry bookkeeping. Bankers in Cairo, for example, used a double-entry bookkeeping system which predated the known usage of such a form in Italy. The Tang dynasty also used a double-entry bookkeeping which was essential to managing the complex bureaucracies surrounding tribute and taxation. In medieval Europe, traveling merchants kept simple single-entry waste books, one column of cash received and spent. Helpful but prone to errors, assets didn't have to equal liabilities, so fraud and confusion thrived. Ratios, division and multiplication were difficult with Roman numerals. Similarly, addition and subtraction also involved an error-prone rearranging of the same Roman numerals. As a result, medieval Europe lagged Eastern and Central Asia in adopting double-entry bookkeeping. Now we slowly move to year 1494. Why such an exact year? This year is often considered to be revolutionary in accounting. Luca Pacioli, a Franciscan friar and math teacher in Venice, published in 1494 Summa de Aritmetica Geometria Proportioni e Proporzionalità, which contained the first printed description of double-entry bookkeeping. Everything is recorded twice, debit and credit. Debits must equal credits. Use a daybook which converts into a general ledger and a trial balance. While he was not the inventor of accounting, Pacioli was the first to describe the system of debits and credits in journals and ledgers that is still the basis of today's accounting systems. And it was in Italian, which all merchants understood well and loved it. Errors popped out instantly. Well, his book remained in print for nearly 400 years. Then came the Industrial Revolution. It created factories, wages and complex costs. Accountants began cost accounting, which included tracking labor hours and machine rates and was used to price products accurately. James Watt Jr., son of the famous steam engine pioneer, was one of early adopters. Railways and stock exchanges spread. Investors demanded trustworthy numbers. In 1854, Britain formed the first professional body, the Institute of Chartered Accountants of Scotland. From this point in time, auditing became a formal job which started to provide independent opinion on the books. After the 1929 crash and the Great Depression, the US created Generally Accepted Accounting Principles (GAAP) to improve reliability of the accounting. The Securities and Exchange Commission (SEC) was established. They had the power to oversee accounting and auditing methods. Post-war global trade facilitated appearance of international accounting standards, now known as IFRS. Huge audit firms emerged to serve global corporations. Today they are known as Big Four: Deloitte, PwC, EY and KPMG. Then came technology, which helped a lot. Mainframes were punching ledgers on punch cards and then moved to magnetic tapes. By 1983, VisiCalc and Lotus 123 turned personal computers into accountant sidekicks. Excel 1.0 from 1985 made formulas drag and drop. Month-end closed faster than any abacus could dream. What is happening now? Now cloud systems post journal entries instantly. AI boards match invoices. Dashboards update profit in real time. But double entry still rules. Some predict blockchain will lock every debit-credit pair into unchangeable blocks, letting auditors verify life. We are not fully there yet, but the experiment shows accounting keeps evolving with tech. Across clay, quills and clouds, one thread holds. Assets equal liabilities plus equity, and debits must equal credits. That simple balance turned trade into trustworthy capitalism. So, quite a journey, right? Let's briefly summarize it. Accounting started as inventory tracking in temples, long time ago. Double entry from 1494 is the game changer we still use. Professional accounting rules, which are framed within GAAP or IFRS, and audits build trust. Technology speeds things up, but principles stay constant. If you found this helpful, tap like, subscribe and ring the bell so that you don't miss the next lesson. Thank you for watching and see you soon. And remember, good records outlive empires.